Heads up, guys. Welcome to Forex Walker. Welcome to episode 111. On the previous episode, we spoke about on the 110th episode, you can watch it. We spoke about the interest rate hikes that we forecasted. The interest rates were not visible on the economic calendar. That was on the 7th of July, and the we focused the interest rates on the RBNZ. They were not there. We only had the consensus was not there. We only had the 2.25%, and we focused the interest rate hikes on the RBNZ. And the reason why we did that was because of the inflation, the perception that the inflationary numbers might spike. So we expected a rally in the inflationary numbers, and the that formed some so an increase in interest rates from what the RBNZ was said in the meeting minutes, uh, was forming a monetary policy divergence. In other words, what the market was perceiving economically was diverging from what the central bank wanted uh, the inflationary numbers to do. So, what happened was that we perceived an increase in inflationary numbers when the Reserve Bank of New Zealand was perceiving a decrease in inflation, and but they instead of the inflation decreasing by itself, the economy was telling us that the inflation will instead increase when the Reserve Bank was expecting it to decrease. So the inflationary numbers were forming an economic divergence or a monetary policy divergence, or it was diverging from the monetary policy direction. So that's the reason why we perceived those rate hikes. And so this consensus here was released. I think it was released a day before the interest rate hikes happened at midnight. I don't remember how it was released, but at that time the consensus was not there. We only had a 2.25% on the forecast, and this region was blank. You can check it on the previous episode, and that is what happened. And unfortunately, I was not able to hold these interest rates on a smaller lot size for us to show how we have the trade. So you can see this is the RBNZ, or the New Zealand interest rates, and you can see that they held from from the 26th of November 2025. And here you can see they had an interest rate hike on the 8th of July 2026. Remember, the New Zealand dollar here in South Africa, uh, it says the interest rates were released on the 7th. Unfortunately, but the time for, how do I say it? Uh, the time zone for New Zealand in South Africa is on the 8th, is at midnight on the AMs. So we saw it on the 7th, but it actually happened on the 8th because it happens at midnight. In fact, it happens in the morning, I think at 3 a.m. in South Africa. So the date for the broadcast for the 111th episode, I hope you can see it on the bottom right of the screen. It says Monday, July the 13th, 2026. That is and the time is 11:19 p.m. At night. So that is the time that which we are broadcasting this episode. So what I'm trying to explain to you is that when you don't have when the forecast does not forecast an interest rate hike, that means the interest rates are unexpected. So, and when the interest rate hikes or cuts are unexpected, they move the market drastically. And I will show you that in a second on here. So this is the trade that we held all the way up here. We liquidated some of the profits. This is AUD CAD, and here we held again up here, and it reversed again. This is the daily time frame. So it reversed again. We're currently holding at this level. Remember, our price action is first touch, second touch, third touch has to manipulate before the market reverses. Unfortunately, economically, the Australian dollar is actually losing strength when I look into the inflationary numbers and the performance of the economy. It is actually losing strength. That means in the future, we might have let me remove this for you and show you exactly what I'm trying to say. That means in the future, on the Australian dollar, we might have something like a peak higher and drop below this low. So we are holding here, but really we need to find another currency to sell because the CAD is not doing well, especially with the escalation of the war in the Strait of Hormuz, Iran and the United States and Israel. So this long bar that you see, the selling bar, is an increase in oil prices. So the Canadian dollar increased with the oil market, and that's the reason why you have the spike that we have on here. We're currently holding right now at the bottom here. Unfortunately, I cannot show you the trade at the moment. This is the spike in the volatility index. This is our WTI crude oil. This is the spike in WTI crude oil as a result of escalations in the Middle East. And Donald Trump just confirmed that the war will resume. So that's the reason why we had this spike from the 7th of July. We been continuing to increase higher, and that's the reason why the CAD is actually increasing strength. Instead of holding a trade with the CAD, we would rather hold a trade with the pound. So that would be pound AUD. Uh, this is a spike caused by the volatility index in the escalation of the war in the Middle East. Let me show you the CAD trades. How they you saw the AUD CAD failing. It failed because of an increase in crude oil price. This is pound AUD. Is one of the trades that I'm currently holding, and the expectations are that the trade will actually give us. You can see that it is in some kind of an uptrend, and we're expecting something like this so that we can break out of this area. So that is our expectations at the moment. We might as well take profit somewhere down there on this trade. We're holding another trade that I may not tell you about. uh, I will see if I can show it to you because it's still in the negatives, and we're still moving into the positive. So this is pound AUD instead of AUD CAD, and the pound is expected to be selling, and the AUD is expected to be buying. Remember, the economy in Australia is actually getting weaker and weaker, so we are not expecting it to gain strength. Uh, Another trade is with the USD, but the USD is also having an economic slowdown. So it's a little bit difficult to sell a trade to buy the USD because it's actually reaching, it's actually economically, the USD is forming a fifth wave. Those who understand Elliott wave, when you look into the macroeconomic side of things, you can actually see price action on the macroeconomic side of things. You can see that this is an economic slowdown. So an economic slowdown is actually fifth wave, and I can actually see it from the fundamental side before I look into price action. So the USD is actually losing strength, and the AUD as well is losing strength. So we are only relying on the weakness of the pound, and that's how we're able to hold these trades. But they're a little bit slow. Let me show you the NZD trades and how we maneuvered around them. Remember, the interest rates are on the 7th. This is the daily time frame. Let me check the date down here. Here it says, where is the 7th? Here it's the 8th or the 7th. So the rally might have happened between the two, the 7th or the 8th. But the 8th is actually midnight. So that would be your rally on NZD CHF. We also have it on NZD CAD. But CAD was actually gaining strength due to what is happening in the Middle East. So that's the reason you have this pullback over here. But remember, the date is the 7th or the 8th. So, but the N2 was actually down here. The market rejected from the 23.6 and it gave us this beautiful rally. So you were supposed to hold it ahead of the interest rate date. This is the entry from all the way below the 23.6. But actually, the date was on the 8th or the 7th. So this is the interest rate arm or the leg that was pushed higher by the interest rates. And this is when you hold NZD with the JPY. This is the same trade with pound NZD for those who can actually sell it without worrying about a negative carry. This is AUD NZD on the 110th episode, where we formed a panic exit. I actually exited on this blue line down here. The take profit level was here, but I believe that the next kick will actually push us higher out of here. So we had to liquidate here because of the perception that economically the NZD will hike rates, and that's the reason, and that's exactly what happened. And the market pushed lower as a result of interest rate hikes on AUD and ZD. Do you remember the pound JPY, the pound JPY trade that we held? I liquidated on this red line. I believe I showed you this, and I had to re-enter the market, and the market actually reversed. It did not land on the 23.6, but it actually rallied and it broke above the previous high right here, and it broke above. But actually, at the moment, I'm currently selling the pound, and I'll be rebuying it again. Uh, I'll check where I will be buying it. I don't know what, but I'm currently selling the pound, and I'll be able to hold the longest move on the pound. This time, I will hold it with the CHF. In the future, you're gonna be seeing a lot of CHF trades that I'll be taking, and that's because economically, the CHF is the only currency out of all these currencies that will be hiking rates at a much later stage. And because of interest rates, I will be doing a lot of monetary policy divergence trades, and the CHF gives me the best monetary policy divergence because there'll be hiking rates. I think in 2 to 3 years' time, there'll be hiking rates, and all these other currencies are actually hiking rates now. So I'll be matching a lot of CHF trades with any other currency that is hiking rates at the moment. So I thank you guys, and I will see you on the next episode. Goodbye.